Sign up today for a 7-day free trial at alerts.chartguys.com. Hey everyone, checking in on the cryptocurrency space. So we're in a bit of a dump right now, and the narrative where we are seeing the safe haven of Bitcoin is out the window. We have broken correlation with gold. The S&P 500 is in free fall, 2.5% down today, just getting a little bit of a bounce now. But what's going on with Bitcoin? Some bad news with Coinbase and some issues with their banking partners, I guess you'd call them, but I don't think that's enough to warrant this kind of dump. Honestly, it feels like extreme fear in markets overall and just flight from high risk. I know it's completely counterintuitive to the narrative of potential safe haven, but just keep in mind that as someone who watches correlations all the way down to the 5-minute time frame in stocks and commodities all the time, correlations are always changing. They're there for a week and then they're gone. They're stronger, they're weaker. That is always a dynamic moving part as to how markets are moving. So at this point, we can clearly say today there is no inverse correlation between SPY, the S&P 500, and Bitcoin. So I am scaling into this oversold bounce, and at this point I have a decent sized position as things are getting extreme. We are looking at the longer term time frame and key weekly exponential support that is approaching. So I'm watching the high, low, lower high, and anything above $9,071 is a higher low. We have held the weekly exponential 12-period support 3 times, and we're heading down towards that level. It will be in the upper 9,700s if we were to drop down to that level. On the daily time frame, still a lower high every single day for the last 8 days in a row. So we don't have a daily high or low yet. Essentially what we're watching on this move is the low, high of the bull move, which shot straight up. Now we're looking for the higher low, and then we'll look for a bounce and a lower high. So we don't know if the bottom is in just yet. We certainly don't have much information giving us clues that the bottom is in just yet. I wouldn't be surprised to see a flush under 10,000. But what I have been doing is been staying very patient. So in these videos, I said we're either watching for an entry on a change in the 4-hour trend, which never happened, or 4-hour oversold conditions. So my first bid filled in the upper 10,700s, and I've scaled in since then. 10,700s, 10,500s, 400s, 200s. It got filled just now at $10,015. And my game plan is continue scaling in until I reach my maximum allowable position size, which I still have some orders under 10,000. I've got some orders in the upper $9,000 range. And my game plan is to sell on a 4-hour oversold bounce and then look to see if we can get a 4-hour trend change sometime in the next couple of days to look for that daily bounce where we would look for then that lower high to form. If this were the bottom, I would be looking for perhaps that lower high to form around 11,000. So 4-hour RSI, and a lot of people that are scaling into this oversold bounce did so a little bit too aggressively. That's the number one thing that it seems like where people are making mistakes, where we just have to have reminders. Number one, we don't ever want to be all in unless we are extremely confident in the setup. And when I mean extremely confident, I mean blue sky breakout kind of confident. So I haven't gone all in the cryptocurrency space since we were in blue. Well, I can't say that because I can't remember that far back. But I was going all in blue sky breakout 2017 all the time. And I probably have gone all in maybe 2% as often in the last year and a half of trading because there are no setups where I'm just that confident to risk it all. So number one, you don't want to fill all your positions. When I'm entering oversold bounces, my goal is for the bounce to start before I'm full up, because that means I still have ammo and I'm still in control of the trade. Whereas if I'm out of cash, I am now at the mercy of whatever the price is doing, and it's pretty much taking your oars in a boat and tossing them away, and now you're in the current. So I want to keep some oars and some control. So what I've been doing is a little bit of managing my positions, and what I mean by that is after my first 3 fills, 10,700s and then 500s and 400s, my average was low 10,600s. So before I went to bed last night, I said, okay, we have a little bit of a bounce right now taking place, and trying to find where that was. It was back here. I said, all right, potential 5-minute inverse head and shoulders pattern, and not exactly sure where that is, but the bottom line is if this breaks bullish, I'm going to take a little bit of my position off. Here it is. Inverse head and shoulders pattern. Little left shoulder, there's our head, there's our right shoulder. I said, if that breaks bullish, I'm going to take off a chunk of my position, break even. Obviously, my goal for the trade is profit, but if I'm going to remain protective and I take off a third of my position break even, that then gives me that cash. It allows me to put my buy orders in the 10,200s and go to sleep, which is what I did. And I woke up to a couple more little fills. And again, there's just little opportunities for some of these bounces, 2-3%. They're not ideal in terms of size, but right now, if I wanted to remain protective, my fill at $10,015, I could sell that right now for a 1.5% move, have that cash added back again, and then have that cash for under 10,000 if we end up breaking that level. So it all depends on whether I want to be conservative, how much of my positions have filled, with how I'm navigating that space. Another thing that I do is I'm moving bids when RSI levels change. A lot of what I'm doing is based off of RSI levels. So for example, just recently, right here, I had a bid at 10,289.88. I missed my fill by $4. And then we started a little weak bounce attempt. As soon as I saw that little weak bounce attempt get going, and we bounced about 1%, I pulled my bid because I said, if we're going to drop to a lower low, it's likely not just going to drop to a lower low by $4. It's going to drop to a lower low more convincingly. So I dropped that bid down to 10,015. So constantly moving, and actually I dropped that one down to the 10,100s. I've gotten 2 fills in the last hour. So again, constantly these little maneuverings, and if you don't like doing this, then don't trade oversold bounces. And there's absolutely nothing wrong with that. Again, it's a hard strategy, and it's just my edge. I've got 9 years showing me that this style works for me. You look at the S&P 500 today, which is falling off a cliff, and you look at this 5-minute downtrend, and I've traded 2 trades today in the S&P 500, both bullish and both green. And you look at that downtrend and say, how is that possible? I don't know. I just like oversold bounces. And I just missed a weak maker on this one. Got stopped out for a tiny win. Should have let it run. That's beside the point. So the bottom line, at this point, if you are not comfortable, which I assume a lot of people are not because the RSI got so extended, these are lessons, right? We want to be learning from our mistakes. And the lesson here is either don't trade oversold bounces or put more time and effort and practice, whether it's paper trading or what, scaling into these positions, scaling out on weak bounces. The fact that we haven't been able to even really get over any exponential hourly resistances tells me that if I take some position off at the hourly exponential resistance, it's probably a good idea to remain protective. So it looks like we are finally getting some bounce follow through, hourly volume climax on any kind of bounce, which we are getting. The hourly exponential resistance will be the key test. That's going to be up, and my scales here are off on my y-axis. But if we're looking at where those exponential resistances are, we're looking in the low 10,400s. And if we get over the hourly exponential resistances with a trend change, if this bounce is able to see some follow through with a little higher low and higher high, then we're going to be looking at the zoom out of the 4-hour time frame. And just looking for 4-hour, anything under 10,646 is a 4-hour lower high. And we have the 4-hour exponential resistance to be watching. So as of right now, my scale in positions are in the red. My average for break even is probably around 10,400 or so. So I'm down 2% on this position. I'm still very comfortable. And the reason I'm comfortable is number 1, experience, but number 2, I still got cash. I think I might be in a 70 to 75% position. So I still got a decent chunk of cash. And if these 4-hour RSI levels get down to low teens, and if the 12-hour RSI wants to get oversold, I will add in the upper $9,000 range. Keeping in mind that if this 4-hour RSI cools off with a weak bounce, that will change my game plan. So let's check in on Ethereum and Litecoin. Not going to do the other coins right now because there's a lot going on in the stock world and I'm distracted. But Ethereum, little daily bear flag has confirmed. 190 broke. We dropped to a lower low. Remember that ETH BTC gave us the heads up of the weekly bear flag. How long ago did it break its weekly bear flag? It broke it bearish August 5th, a 9-day heads up. And what do you know? The US dollar pairing is doing the same thing. So we are now in a weekly downtrend. And that's a very distinct difference between Ethereum and Bitcoin, with a weekly lower high and lower low, while as Bitcoin is still in a weekly higher low pattern. So that's extremely notable, which now means zoom out to the monthly, because monthly consolidation is underway. And the bulls must hold 80.60 and then break 364 to change the monthly trend. And the monthly chart is the only time frame on a lot of these names that is not in an uptrend. We had the weekly uptrend, daily uptrend, yearly uptrend. Shorter term time frames had uptrends. We need the monthly trend change if we're going to be full steam ahead for sector bulls. So there's no major red flags. Obviously, nobody likes pulling back this significantly, and it is going to take a 100% move at this point to get back to that resistance level. But we knew monthly consolidation was inevitable at some point. Here it is on Ethereum. ETH BTC has made a significant move, but it is pulling back as well. Anything on the daily under 22 is just a lower high for me. So if the bulls are going to prove anything, we have to hold 17.5 and then turn around and break 19.8, the top of this move. The daily exponential resistances are still remaining intact. So bulls have a long way to go on these Bitcoin pairings to prove anything to us. Litecoin, bear flag on the daily confirmed, 76.63 broke. So the weekly bear flag has been confirmed. Again, the Bitcoin pairing already did this a while ago. Weekly bear flag confirmed. So the daily chart, anything under 998 is just a lower high. Still rejecting from exponential resistance. It was a nice oversold bounce, decent gains there, 10% or so, but no follow through at this point, which means I'm still not interested in the altcoins, but this oversold bounce definitely has me keeping an eye on things. So bottom line, just watching the bounce and playing the zoom out game. We'll see how much follow through this bounce gets. We need a 15-minute trend change for it to mean anything. And we'll check back in tomorrow and see how this bounce ends up playing out. Stay protective, have a game plan, and best of luck. Do good things out there. Quickie check-in video. I appreciate it. See you next time.